While the market is glued to every move from Tesla and Palantir, Cathie Wood is already playing a totally different game. In a fascinating series of moves, she's been trimming her positions in these fan-favorite stocks, rotating millions of dollars out of the very names that made her a household name. But make no mistake, this isn't a retreat, it's a calculated pivot. She's going in hard on a new set of companies, some of you've probably never heard of. And behind these trades is a hidden strategy that might just define the next wave of disruptive growth. So, why is she selling the darlings of the tech world? And what does she see in a specialized AI healthcare firm, a dominant ad tech giant, and a bold crypto treasury company that nobody else does? We're about to break down the trades, connect the dots, and reveal Cathie Wood's playbook for 2026 and beyond. This is Max from AlphaForge AI, where we turn market noise into trading signals and hype into context. So, first of all, let's talk about the sales that are grabbing the headlines. Over the past few weeks, ARK Invest has been constantly trimming its positions in both Tesla and Palantir. These aren't massive liquidations, but rather a pattern of steady strategic sales. For instance, on November 7th, ARK offloaded shares of Tesla worth around $32 million. We've seen a similar story with Palantir, with sales taking place in October and November. So, is Cathie souring up on Elon Musk and Alex Karp? Not a chance. It's critical to understand that both Tesla and Palantir are still top 10 holdings in her flagship ARK Innovation ETF, or ARKK. This isn't a breakup. It's just strategic profit-taking and risk management. After both stocks had a phenomenal run, this looks like a classic Cathie move. Trim positions that have grown to an oversized weight in her portfolio and reallocate that cash into what she sees as the next big thing. This is the core of her strategy, a constant rotation from today's giants to tomorrow's innovators. And I'll show you in a moment how her recent buys paint a crystal clear picture of where she thinks that next explosive growth is hiding. The single biggest clue to Cathie's new strategy is her aggressive accumulation of one company, Tempus AI, ticker TEM. On November 6th and 7th, ARK snapped up over 220,000 shares of Tempus, pouring over $16.2 million into the company. This wasn't just a casual buy. It was a high conviction move. The purchases came right after the stock had dipped following its earnings report. A classic buy the dip moment on a stock she believes in deeply. This buying spree has helped make Tempus AI the fifth largest holding in the ARKK ETF. So, what on earth is Tempus, and why is Cathie making it a new cornerstone of her portfolio? Founded in 2015, Tempus AI sits at the red-hot intersection of healthcare and artificial intelligence. Its mission is to build the world's largest library of clinical and molecular data and create an operating system to make that data useful. Put simply, they use AI to analyze a patient's genetic information and medical records to help doctors make faster, more personalized, and more effective treatment decisions, especially in cancer care. Cathie Wood has called AI in healthcare the most underappreciated application of AI, and Tempus seems to be her number one bet on that idea. The company's business model is a thing of beauty. They make money from genomic sequencing tests, but the real treasure is the data. Every test feeds their massive database, which they can then license to pharmaceutical companies for drug discovery and clinical trials. It's a powerful flywheel. More data leads to smarter AI, which leads to better products, which brings in more hospital partners, which generates even more data. This move is part of a broader pivot into genomics, as ARK has also been adding to gene editing firms like Intellia Therapeutics. The message is loud and clear. Wood believes the fusion of AI and biology is the next frontier. Okay, now we move from the new cornerstone to the speculative frontier. These next two companies are key to understanding the more aggressive, forward-looking part of Cathie's strategy. First up, the trade desk, ticker TTD. On November 7th, ARK made a significant purchase of over 300,000 shares, values at around 14.5 million. This buy was telling because it came right after the stock took a hit following its Q3 earnings, showing ARK is ready to pounce on what it sees as a short-term weakness in a long-term winner. The trade desk isn't an ad agency, it's a technology company. It runs a huge cloud-based platform that lets ad buyers manage and optimize data-driven digital ad campaigns across almost every channel you can think of: websites, mobile apps, and connected TV. In a world moving away from tracking cookies, the trade desk offers a transparent, auction-based platform for buying ad space. For Cathie, TTD is a pure-play bet on the unstoppable shift of advertising dollars to programmatic, data-driven platforms. But here's where the strategy gets really interesting. BitMine Immersion Technologies, ticker BMNR. On November 6th and 7th, ARK Invest went on a buying spree, snapping up over 240,000 shares of BitMine for roughly $9 million. And just like her other recent buys, this one came after the stock had taken a significant price drop. So, what is BitMine? It's a blockchain technology company that pivoted to an aggressive Ethereum-focused treasury strategy. While it has a history in Bitcoin mining with advanced immersion cooling technology, its main goal now is to acquire and hold a massive amount of the Ethereum network's native currency, ETH, with the ambition of eventually owning 5% of Ethereum's total supply. For Cathie Wood, BMNR is a way to gain significant leveraged exposure to the Ethereum network within a corporate structure. It's a high conviction bet that fits ARK's long-held thesis that compute, crypto, and energy are converging. Let's take a brief pause. If you're getting value from this deep dive, do me a favor and hit that subscribe button to stay informed on the latest AI and investing trends to become your own hedge fund. Meanwhile, it also helps me to please my AI overlord, the algorithm. And don't forget to ring the bell so you never miss an update. So, what's the hidden strategy here? Selling a bit of Tesla and Palantir isn't about giving up on innovation. It's about rotating that capital down the risk curve into the next generation of innovators. The strategy reveals three core pillars for 2026. Number one, AI-powered biology. The huge investment in Tempus AI shows her conviction that the convergence of genomic data and artificial intelligence will revolutionize medicine. This isn't a vague bet on AI. It's a laser-focused investment in a company with a powerful data-driven moat. Number two, the future of digital infrastructure. The buys into the trade desk and BitMine are bets on the fundamental infrastructure of the digital future. TTD represents the infrastructure for advertising in a post-cookie world, while BMNR represents a bet on the financial and application infrastructure of Web3, centered on the Ethereum network. Number three, contrarian conviction. Did you notice the pattern? She bought TEM, TTD, and BMNR after they all had experienced significant price drops. This is the hallmark of a high conviction investor. While others panic sell on earnings dips or crypto volatility, she uses the pullbacks as a chance to build major positions in companies whose long-term stories are all still intact. In essence, she's rotating from companies that have already seen massive growth to a handpicked group of earlier stage, hyper-growth companies she believes could become the next titans of industry. It's a move from established disruptors to emerging ones. So, there you have it. Cathie Wood's recent portfolio shift is far from random. It's a disciplined, forward-looking strategy to rotate profits from mature winners into what she sees as undervalued next-generation leaders in AI healthcare, edtech, and the crypto economy. This strategy definitely has its risks. The ARK Innovation ETF is up an impressive 44% year-to-date in 2025, crushing the S&P 500. However, looking back 5 years, the fund's performance has been volatile and has underperformed the broader market. A reminder that these high-growth bets can be a wild ride. The moves into Tempus AI, The Trade Desk, and BitMine are bold, contrarian, and quintessentially Cathie Wood. She is doubling down on her vision of the future, even if it means weathering some serious short-term turbulence. Now, I want to hear from you. What do you think of this major portfolio shift? Are you buying what Cathie is buying, or do you think trimming Tesla is a mistake? Let me know your thoughts on TEM, TTD, and BMNR as well in the comments below. As always, this is not financial advice. I'm not a financial advisor, just a forge rat hammering out signals. Remember, the market is the forge, your research is the hammer. Thanks for watching, and see you in the forge.